Hello all, it's Felicia, the Real Estate Dreamcatcher. Recently I was contacted and I was asked in my inbox whether or not I can speak on the taxes when it comes to selling your property. Now I don't want to dive too deep into how much you're going to be taxed when you actually sell your property because I'm not an accountant and I definitely advise you to speak to an accountant, but I think what they were referring to is the capital gains tax. Typically, if you sell your home, you can be taxed on the amount of income or equity that you actually do get from the sale or profits from your home. Of course, Uncle Sam wants his money. So when it comes to selling your home, up to a certain amount of that property can be taxed. Now, there are inclusions, exclusions, exemptions, things of that nature. That's why I say you do want to talk to an accountant. Things vary, such as how long you actually lived in that property, if it was your primary residence or not. And I believe there's some sort of cap up to $250,000 or more is typically what they're looking for. So you definitely want to talk to an accountant about that. But also there's ways that if you are taking those funds and you're rolling them directly into a new home, then you can avoid the capital gains taxes. So again, just briefly touching on this, you're gonna wanna dig into this a little deeper with a real estate accountant or professional. Now, I do want to talk to you guys about the taxes as far as your properties are concerned. When you're looking or purchasing a property, you may see that the property taxes from one home to the next home, if they're next to each other and they're practically the same home, they could be different. Things vary, but typically location can be taken into account, the size of the home. The assessments are different because you just don't know what's going on with that person's household. They may have filed for a tax exemption for being a primary resident or their primary residence versus owner occupant home, something of that nature. Even veterans at times get tax breaks. So those can vary. And as a homeowner, you can actually go to your county and actually ask for a reevaluation of your tax assessment if you do feel that you're being charged too much for taxes. But just be careful about doing that because it can come back and bite you in the butt too, and they can realize that they are not charging you enough. But definitely if you are a first-time home buyer and you purchase a property and this is your primary residence and only owner-occupied residence, then you want to look into something called the Homestead tax exemption, because after you purchase the property, you will be getting something in the mail from your county regarding the homestead that you can apply for. After you become a homeowner, just make sure you change your driver's license to the address in which you just purchased. And then when that comes about, that application comes in the mail, or you can go onto your county's website, then you can apply to get your taxes lowered because you are actually occupying this as your only primary residence. So just wanted to touch on that briefly, and hopefully this helps.